The reason it hasn't worked is not because its stablecoins haven't worked or Stripe's not smart enough. There's a lot of inertia to getting a new thing done at a company. And sometimes you have to make these really big, bold, like burn the boats type of moves as a founder, I feel like.
I don't want to touch something that doesn't capture and does fundamental value. I'm sorry, but I don't feel comfortable owning it inside my portfolio.
Scale is the blockchain that is simply built different. Other L1 networks have costly transaction fees, clunky user experiences, and lack true adoption in AI and on-chain gaming. Explore the gas-free ecosystem at skale.space/ecosystem and follow their journey on X at Scale Network. That is Scale with a K. Hit the link in the show notes to get started. Hey everyone, excited to share with you that Cronos ZK EVM has launched its Pioneer program, offering early adopters a chance to earn not only loyalty points, but also potentially win part of a $30,000 ZK CRO giveaway. If you're interested in being an early adopter, visit zkevm.cronos.org/bridge. Big thanks to Cronos for sponsoring today's episode. The inaugural Aggregation Summit is a can't-miss two-day event from November 10th to 11th in Bangkok, Thailand. Organized by Polygon Labs, the Ag Summit is bringing together top crypto builders, researchers, and leaders to discuss the fragmented ecosystem of today and how aggregation can get the industry together. Head on over to aglayer.dev to book your tickets or join the main stage live stream on the 11th of November. Hey everyone, Jason here. There's a reason why Ledger is trusted to secure more than 20% of the world's crypto assets today. Check out their newest devices, the Ledger Stacks and the Ledger Flex, featuring the world's first secure touchscreens. Take your security seriously. Hit the link in the show notes of today's episode to check out their latest devices. Trust me, you won't regret it. What's up, everyone? How we doing? Welcome, Santi. What's up?
GM, we're in the same city finally.
How's the New York trip?
Love it. Love this
city.
Oh
man, should we zoom in on? How do we? Look at that! Look at that cleanly shaven man, everybody.
This is as probably I did shave fully,
yeah,
but
just
yeah,
this
my barber back home, he just went at it.
Like, barber went butcher mode. Yeah,
he did really butcher me. Anyways.
I don't know if it's butcher, but clean shaven, clean. Well, I guess if you're fundraising, you need to, it's like, you come to New York, you look like the New York Yankees, tighten it up a little bit.
Sorry for your loss yesterday, by the way, folks. It was tough.
I'm a Red Sox fan, so I'm.
Oh, are you? Me too.
Yeah. Oh. Yeah. Why are you?
Because I went to school in Boston. I literally live, I could see Fenway Park from my house.
Nice. Yeah. Great Netflix show going on called The Comeback, which is about the Red Sox Yankees and then the 2004 ALCS, which were Red Sox were down 3-0. Anyways, how's the fundraising trip? You're here to fundraise?
Well, I'm here to run the marathon on Sunday. But I did get in earlier to just have a bunch of meetings. And yes, fundraising, meeting potential hires, got office space yesterday. So very exciting stuff.
Let's go.
Yeah. I mean, New York's such an important city. I think a lot of the team's going to be based here. Most of the strategy is going to be based in the U.S. Just looking at targets. So that's all ongoing. It's just kind of paralyzing everything. So yeah, incredibly busy, but very exciting. The marathon at this point is an afterthought, to be honest.
Yeah, it's funny. Last year, I feel like everybody was really into the marathon and training very hard. Not just you, a lot of my friends and even people at Blockworks, everyone's training really hard. This year, still the same amount of people running the marathon, but nobody's taking it that seriously. So I'm like, what does that say about society or where people are at?
Sir, I mean, N of 10. So the data sample is pretty small. I was thinking about tweet about this. I mean, just if you have the opportunity to run the New York Marathon, you should. It's like the best. I've done all the majors. I've done, God, so many marathons. But I make a point to come here every year and run it because it's just amazing. Boston's great. Tokyo, Berlin, London, Chicago. Run same SF. I've run a bunch. New York is just on a whole new level. And I just love coming here because it's the greatest city in the world and the experience is unparalleled. It's just unreal.
Yeah.
Yeah.
Any interesting fundraising meetings, or probably can't talk about them yet? But
Can't talk about it. But yeah, I mean, a lot of people have been reaching out, so I appreciate that. A lot of my time's just been spent focusing on just DD on potential targets, and I'm just like, my brain's there. Fundraising is
nice.
like, I'll have some meetings here and there, but it's a lot of the people that I've worked with in the past. I feel most comfortable going with initially, and it's very informal. It's just conversations, and of course, people seem to like the strategy. It's but until I close the fund, as I tell people, I'm going to raise what I want, or I'm going to raise zero, and I'm going to put my money to work, and I'll
Yeah,
either
nice.
live or die. But I'm going to do it. That
Target goal of 1 billion.
Yes,
Cool.
or
Let's
more.
go.
I mean,
Or more.
the strategy's uncapped,
Yeah,
but
yeah.
I do think as a first fund, it would be. As I've thought about it, I think that would be a sufficiently large fund to execute on the strategy and be dangerous
Yeah.
in the good sense of the word.
So we interviewed last night Zach,
Right.
who's the founder of Bridge.xyz, which just got acquired by Stripe, obviously for $1 billion. And uh, we talked about the deal. It's the first public appearance. Let's go, La Colombe, sponsor us, baby. We
Blockchain,
need.
baby. This would be.
How many La
It,
Colombes do you drink in a day these days?
don't ask questions you don't want answers to. By the way, also, this would be, La Colombe would be a reason to move back to New York. So, and
La Colombe, if you are out
if
there,
Trump wins, though,
we could use a sponsor. Yeah.
for sure. Best coffee
Actually,
in the
we
world.
get roasted for having too many sponsors on the show, but you know.
La Colombe, we could.
Um.
We interviewed
Okay.
Zach last night.
We had Zach. Yeah, we had Zach on the pod. It was So it was the first public appearance that he's done about the Stripe acquisition. So the deal hasn't actually closed. It's with Lena Khan and the regulators right now. But we talked about the acquisition. But I mean, the show ended up basically turning into a pitch for inversion capital. It was really an amazing. It was. I've heard your pitch obviously for it, but it was amazing to have that in my head and then hear him outline the benefits that stablecoins actually bring to the market and actually can bring to these legacy companies. And he walked us through a couple of examples, and whether it's treasury management or payroll or I think the most exciting thing that he talked about is like, look, we're kind of doing what happened with the internet and with the iPhone, which is like you just apply it to these old use cases, but like the new use cases, the really crazy cool stuff hasn't even come yet.
No.
So, anyways,
I mean,
just a really good episode. That'll be out on Tuesday,
yeah,
folks.
people should definitely. It's one of the more invigorating, kind of energizing conversations, of course, because I'm thinking, like breathing this constantly. But I go back to like the early days of like DeFi. Like stable coins are just, the minute you use them, people talk about it. It's a Trojan horse. It's a killer use case. It is just such a powerful thing. Like if we just stopped innovating and that was it. It's just an amazing use case. Anyone that's traveled, anyone that has done cross-border payments, anyone that has a company that does international, like basically is international, really really appreciates that. One of the things that Zach said, that I really liked, was how he described the current financial system, which is a lot of fintechs, including Stripe, or Square, where he was at previously, or Brex. Some of these, like fintechs that have, he said, they've innovated on the margin, which is, I took to mean, the current financial system is very antiquated and you can only do so much. Like we've sort of like hit a limitation point at which, like, even Stripe, as I think about why they acquired Bridge, is they sort of realize like you can only innovate so much with a patchwork of antiquated systems. The
Yeah.
next level of growth, the future, is really operating in these permissionless ledgers, and it's like from scratch, right? It's just, and stablecoins really are that, and I think that's why, if you were to you asked him some great questions around why would Stripe acquire them versus build them. They just launched 18 months ago. Like, Stripe's a really good, competent team. They could have done this themselves. But I think Stripe just sort of woke up one day, and the Collison brothers are incredibly smart in this way, and they've been talking about stablecoins. And I think they just realized, like, 3 years ago, probably too early. Today, they woke up and they felt a sense of urgency because Bridge has gotten so much traction so quickly. And Zach was just describing how many other developers were just innovating and pushing them and doing all these crazy use cases that, uh, I think Stripe saw through that and felt this, kind of woke up one day and said, felt this sense of urgency and was like, we need to
Yeah.
get this now. Otherwise,
Yeah.
we're gonna lose a very big competitive advantage that they have already.
So Stripe has actually tried to do things with stablecoins twice in the past,
Mhm.
and both times it hasn't worked out. And the reason, from my understanding and talking to friends at Stripe and stuff like that, the reason it hasn't worked is not because it's stablecoins haven't worked or Stripe's not smart enough. There's a lot of inertia to getting a new thing done at a company, and
Mm.
sometimes you have to make these really big, bold, like you know, burn the boats type of moves as a founder, I feel like. And this to me was the Collison brothers doing that. They said, everyone's talking about how they overpaid and stuff like that. First off, I don't think they overpaid. The
I think this is like an Instagram meta acquisition where in the future we'll look back and this was incredibly cheap.
But I think the big reason why they did it was because I heard the way that the deal went was there was a deal team and they had the DCF and they're building these models, and Patrick said, "Fuck your models. We're paying $1 billion for this company," or whatever the real amount was, a 700 million or 1.1, whatever.
Come
We're
on.
paying a large amount that nobody on the M&A team thinks makes sense. We're getting this deal done. I've got voting shares. Push this thing through,
Right.
and uh, for him, I mean, that's just rumors of what I kind of heard, but for him to do something like that, the reason I think that he did it is to plant their flag in stablecoins. You
Yeah.
get this huge press release, big announcement.
Mhm.
Stripe is here to play in the stablecoin space, and I think it's a brilliant acquisition. I think it's Bridge has these low level APIs, right? Zach talked about this on the episode, but they haven't really created APIs for one use case. They've done it's the exact same way that Patrick and John talk about their business, and yeah, I just like it a lot. So
Yeah. A lot of what to your point around inertia, I've been spending a lot of time talking to kind of the implementation partners, that the tech stack that a lot of which I've invested in, but also that I'm going to implement, in the first 100 days kind of playbook. And it's just really interesting to hear and go deeper into why we haven't seen as much of an adoption. It makes you wonder, was it timing off? Is it tech not ready? Is there just where is this like lack of appetite to, because we know clearly it works. It's just why is it?
right.
And one of the things that I've heard kind of over and over is most businesses, especially if you're doing B2B or B2C, is this idea that merchants are very sensitive and unwilling to risk. They'd rather pay 4 or 5%, even more, to than add any amount of friction into the
Hmm.
checkout process, into the equation,
Hmm.
right? But I guess the point that I'm trying to make here is, why now? Because there have been very, over the last year, I'd say, very important innovations that have facilitated and just made the UI UX incredibly seamless, that I would challenge people and say, and go as far as to say, if you look at Blackbird, for instance, and their pay flow, it's just actually on par or easier than traditional uh, payment methods if you are
Yeah.
using PayPal. And a lot of that's account abstraction, gasless transaction, batching, all these things really do matter. And I don't think we could have, I don't think 3 years ago, it was a very different experience, is what I'm trying to say. And a lot of times in crypto, people don't come back. People don't revisit the thesis. People don't, or sort of have this idea of what crypto is. And you just have to, keep hacking away and just, um, I do think that when Stripe, with the muscle and the distribution of Stripe, just totally different game, because Zach was describing this friction, right?
Yeah.
Um, so well, it's going to
Yeah.
be incredibly
Uh,
exciting to see how that plays out.
Very much so. All right.
Mm.
Few news stories I wanted to get to in this roundup. So one
Sure.
was Coinbase had earnings. And the market reacted pretty poorly. And I want to make the argument that that was just a really overblown reaction. I very much disagree with it. Celestia unlocks happened this week, and it
Hmm.
was one of the biggest unlocks in the space in a couple of years. And so I think just the Celestia unlock is less interesting, but more interesting to talk about these. What was the market reaction? How will the market react to other unlocks? There was a big poly. Uh, the market thought it was a big poly market story. I think it's a total nothing burger of a story, but there was a wash trading story about poly market. And then there were actually a couple layoffs this week. So maybe we can start with the layoffs. So
Right.
this week, um, DYDX, Consensus, and Kraken all publicly announced layoffs. There were a couple other more quietly announced quietly done layoffs that have not been publicly announced yet. But DYDX CEO Antonio Giuliano said that 35% of the core team was let go. Consensus CEO Joe Lubin said Consensus had cut 20% of the staff. That is 160 positions at Consensus. That is, let's see, for DYDX, I think they had probably 50 folks. I think that's about 10 people. And then Kraken also had layoffs. So Kraken announced a new co-CEO. What is his name again? Arjun Sethi. He was at Tribe Capital, I'm pretty sure, before. I think he's also one of the largest independent shareholders of Kraken. I think. Don't quote me on that. Kraken had layoffs as well. So laid off, somewhere between 15 and 20% of the company. So this is interesting, right? Because it gets to this idea of, are we in a bull market? Are we in a bear market? David Hoffman and I were debating on stage at Permissionless. He said, we're in a bear market. I said, there's no possible way we're in a bear market.
Bitcoin hit all-time high this week.
Bitcoin hit all-time highs. It's just that ETH is not moving. I'm sorry, David. So it kind of gets to this question. I think that this is interesting for two reasons. One is actually really one thing. First off, I don't think we're in a bear market. I think we're in a bull market. Bitcoin's about to hit an all-time high. Other things are hitting all-time highs. You're just seeing a bigger dispersion than we've ever seen in the industry between things that go up and things that go down. The really interesting thing was actually one line that Joe Lubin said. And then Antonio said a very similar thing. So he put a little bit of blame on the SEC. He said, look, with the government coming down on us, such a tax, this is a quote, such a tax from the US government will end up costing many companies that have been investigated, sued, or sent Wells notices many millions of dollars. But there was an interesting line here that I'm starting to see in Telegram chats with founders and group chats that I'm in with different founders. This is a quote from Joe Lubin. He said, looking ahead, I see a next generation not dominated by large monolithic companies. Instead, smaller, agile, AI supercharged companies with Web3 based coordination tools will operate more efficiently. To stay competitive in this fast growing space, we need to reshape ourselves and be more agile, more effective, and even higher performing. It's very related to something that Antonio talked about, if anyone listened to the DYDX episode, and he posted in his blog post about this. He said DYDX is moving to a model that has flat hierarchy, less meetings, no management structure. And actually, Zach brought it up on the Bridge podcast too. He said, look, we've got about 50 employees today. We have 0 managers. We have 0 management at the company. It's a very different way of building a company. And it's, the thing that kind of took the internet by storm, at least in the tech world, probably 6 weeks ago or 4 weeks ago, was this founder mode, right? Paul Graham wrote about it, but really it came from Brian Chesky. And so I just think that this, it's something that is quietly behind the scenes being talked about in every single founder group chat I'm in, because people are building their hiring strategies for next year, right? They're talking about, people owe their budgets to the board. They owe hiring strategies to the team. People are doing their financial reviews, and people are wondering how many, what really is the benefit to just layering on more and more and more people at these companies instead of staying really agile and just saying, how can we get more efficient, more efficient, more efficient? So, I'm curious if you have any thoughts on this.
Oh, that's well put. I think I'll just add Gary Tan, who is the president of Y Combinator, had a few interesting tweets that I saw a couple weeks ago, which talked about the cohort, the new cohort, the batch of Y Combinator, and how they were really just even leaner and meaner because they were leveraging a lot of tools, like particularly AI, that allowed them to just not hire as many people. There was also a tweet, I don't know how much lend as much credence to it or not, but I found it interesting, which is a lot of these companies are building a lot of these solutions in house using AI tools and ripping and kind of replacing existing SaaS solutions. I don't know how much of that is true. It's something that is worthy just to pay attention to. I think about it a lot as well in terms of these transformations, like how much can you replace your CRM, your workforce management. These are large companies that historically have been very much embedded into pretty much every organization. The penetration rate is still quite low. A lot of businesses, particularly medium sized, don't really adopt technology, and especially family owned businesses. But now you can do a lot with just build a lot of these solutions in house with you know a lot of stuff that's open source, right? So I don't have as much of a kind of really good view into how real or how much of that's actually happening in practice, but it's definitely interesting. It's kind of like the McKinsey reports that everyone's talked about, or these consultants that say, "Hey, look, it's going to be a massive transformation in the labor market over the next decade with AI," right? So maybe that's part of that.
100%,
I
100%.
also think
So
Antonio, I also think about what Musk did at Twitter. Like he went in and just fired like a lot of the organization, and it's like Twitter still works. It's actually a better product. So it's like how much of these companies are actually bloated just because most companies I just think are bloated, or and so you go in there and just I think Antonio, that's probably what he saw, right? Taking the
yeah,
Musk playbook.
yeah. It's just gonna. I mean, it's gonna be really interesting to see what ends up happening as these. I think this strategy will end up mostly working. Mostly working, I would say.
Mhm.
And I'm not sure I'm not sure it's going to be the consensuses of the world who lay off 20% of their people and still have 1,000 employees, and it makes them much better, because it's like there's a lot of, again, like the Stripe example, there's a lot of inertia inside of these companies.
Mhm.
What I'm really excited to see is the new founders who come in and build these companies and just don't end up hiring people. They just get better and better and better at using AI. So
Mhm. Yep. Absolutely.
yeah. Yeah, I don't know. It's something we're thinking a lot about it at Blockworks, right? Because we create so much content. So it's like, what is the role of AI there? So
Mhm.
I don't know. All right. Coinbase earnings.
Yes.
Did you take a look?
Of course. Last night. Yeah.
All right. Coinbase announced earnings. Let me see if I can pull up a little summary tweet here. Um,
They announced a
all right.
big share buyback, but yeah, go for it. This is a good
Yeah.
summary.
So Ryan Rasmussen, who's head of research at Bitwise, just put out a good summary tweet. Um, Coinbase Q3 2024 earnings. All right, revenue came in at 1.2 billion. This is down 17% versus Q2. Net income of 75 million, which is up over 100% versus last quarter. Adjusted EBITDA 449 million, down 25%. Cash is up to 8.2 billion, which is up 5%. I don't think it shows it in here, but about 25% of their balance sheet is now in, or I think it's 25% of their cash is now in crypto,
Mhm.
not in fiat. They authorized $1 billion share repurchase. Base transactions are up 55% versus Q2, and then front and center in this PDF and this image that they always release. There are now 1.8 million people advocates of Stand with Crypto.
Mhm.
The market didn't like it. They didn't like seeing. Here I can just pull up the.
The stock's at 201. Market just opened now, but it was down 5% after earnings.
So the news
Yeah.
stories: Coinbase shares fall as muted crypto trading leads to third quarter miss. Coinbase stock falls on earnings miss. Coinbase revenue may be hurt by lower trading volumes and regulation.
Mhm.
Uh, Coinbase stock dives on earning miss. So
A
that
lot of
was
the analysts,
the street's reaction.
yeah, I saw one of the JP Morgan analysts updated his model last week ahead of earnings, and like the price target was like 191. The stock's at 200 now. It's up 16% year to date. Yeah, it's sort of a tale of two cities, right? It's always interesting how the market responds to this, and you know, I do think that, yeah, I mean, the share buyback's pretty encouraging, I'd say.
Yeah. Do you have general thought? I mean, I know long term thesis on Coinbase, but any updated thoughts on this?
On the particular earnings report,
Yeah,
Coinbase
on
long
earnings
term.
or like current
Well,
thoughts on Coinbase.
can we quickly just zoom into the earnings call around what was the commentary on Base? Because Base has been seeing incredible amount of growth, and we can maybe link some of the stats. But usage is up. I think revenue, probably sequencing revenue, has also gone up substantially. I mean, it's becoming a non-trivial component of their P&L.
Yep.
in earnings, I'd say. So let's just look at that for a minute. And also, while you do that, I'm going to try to look at what was the commentary from the management team on it.
Yeah, so I just pulled up our dashboard on Base. I mean, you can see transaction count, you can see addresses, you can look at their financials. I mean, let's see. The key numbers that they put out for Base was 2.5 billion in TVL,
Mhm.
2x the growth on new contracts deployed quarter over quarter, up 55% increase in Base transactions quarter over quarter. I don't know if they put the revenue in there.
Other transaction revenue was 34 million in Q3, down 35% quarter over quarter, primarily driven by lower Base sequencer fee revenue. The number of transactions on Base increased 55% quarter over quarter as users and developers took advantage of lower fees. Median fees in Q3 were less than 0.01. So that's a cent. We believe that more developers will choose to build their products on Base as the cost to transact becomes lower. This quarter, we saw developer engagement continue to increase, and the number of new contracts deployed more than doubled from Q2. So that was their commentary on Base. Subscription revenues, which is something that is also interesting, has been going, becoming a non-trivial component as well. That was came in at 556 million, down 7% quarter over quarter. They were pleased with the results, even though it was slightly down. What else? Stablecoin revenue, which is also pretty substantial, 247 million, up 3% quarter over quarter. This is something that would be interesting to see. We've talked about extensively during the pod. Every exchange is going to launch a stablecoin. Every perhaps application, even in the episode with Zach yesterday, is going to launch a stablecoin. What does that do to USDC and the stablecoin revenue for Coinbase, right? They talk about here primarily, so stablecoin revenue, 247 million, up 3%. The primary drivers of growth were higher average USDC on platform balances. That's interesting. Grew 7% quarter over quarter, 6.6 billion in stablecoin balances on the platform. So, potentially that money flows into crypto, as more risk on appetite post-election kind of thing. Be interesting to track how that 6.6 evolves over time. Higher average USDC market cap grew 5% quarter over quarter. That's also interesting. Those drivers were partially offset by lower effective interest rate. So that makes sense. Or rate cuts. So we understand that. So at the end of Q3, they had 8.1 billion in on-platform USDC balances. That is 8.1 billion on the platform. That's pretty good. USDC market cap reached 36 billion, the highest total since early 2023. Year to date, USDC has been the fastest growing major USD stablecoin. Our platform incentives, combined with deeper integration of USDC across our products, has been contributors to both market cap and on-platform balance growth.
All right, can I give you my take on all this, Santi?
Yeah,
I
go
think
for it. I'm going to
everybody
read
is.
through this. Yeah, but go
Oh
for it.
yeah. Go ahead.
Mm-hmm. No, do it. I'm going to read through it and just give the skinny to people, but please give us your take.
I mean, I think everybody's mid-curving the hell out of this. This whole Coinbase earnings call is overblown. The people don't trade in the summer. People don't trade in the summer, and people. I mean, people don't trade when the market's just in this like consolidating period. So you combine the summer with like this kind of crypto choppiness. They also Coinbase also hasn't had many memes on the platform. Like this is just a really overblown earnings call. I think Q1. I think next year Coinbase is going to have a monster year. When you think about like where Coinbase sits in relation to the entire market, I mean, if you're bullish crypto, you got to be bullish Coinbase right now. It feels. What's the market cap? Market cap is 50-ish. I want to say. Yeah. Okay. It's sitting exactly. Yeah. It's at 51 today.
Yeah.
You're looking at $50 billion market cap for the best public company and the fastest. They're two of the fastest growing industries in the world, is AI and crypto, and Coinbase is the leading company. It's just, I mean, I own Coinbase. I'm biased, but like it just feels extremely cheap. And then, I mean, congrats to Jesse and the whole Base team. Like they had insane growth. Easily I'd call them the winning L2 of the year so far. Yeah, I just think they've had like, I don't know, feels like a very mid curve take to be selling Coinbase right here.
I mean, the market's always play the short-term game. A couple more interesting salient points from the earnings call. Stablecoin volume, this is USDC and all combined, reached 22 trillion year to date, more than doubling year over year. Okay. We talked about USDC market cap also growing 11%, fastest growing USD stablecoin. Another interesting thing, obviously Coinbase rolled out CBBTC. That will also be interesting to track as more activity in the Bitcoin network, particularly in DeFi and other on-chain applications, grows. There's a whole host of L2 sidechains that are, picking up steam, from Babylon to Arch and a few others we found in the pod. Also probably capitalizing on WBTC's just kind of what I would call fumble. Your point around Base is correct. Base is now the number one L2 in both transactions and total TVL. That grew 55% quarter over quarter, surpassing all other L2s and 4 times higher than Ethereum. That's the L1 over the last 30 days. Yeah, I agree with you. I mean, ultimately, I think people are just coy and waiting for the election result, and litigation is ongoing. You know what I mean? Like, so that continues to be a sticking point. But encouragingly, the analysts keep it at neutral, and I think this tells you the market sentiment towards crypto. Maybe this is a good transition into ETF flows, because that's also been something people have been paying attention. There was a lot of ETF flows yesterday. It's a tale of two cities, right? You have Bitcoin having record inflows, Ethereum basically getting zero. So there's also filings by Cayman Capital and a few other folks. I mean, on the Solana ETF, Bitwise, I think, I believe it was Bitwise, continues to have, just changes to their registrations on other ETF products, like with Ripple and a few others. Like, this is over the last couple of weeks that I've just observed. So, yeah, we'll see. All eyes on the election. I don't think the market, both with Coinbase and just generally, is going to do much. There might be some vol, but I think people are just on the sidelines, like, cautiously waiting.
By the way, I mean, great point on the ETFs. If people miss this, BlackRock's Bitcoin ETF had its largest ever inflow day in history yesterday, 875 million in a single day, which means the Bitcoin ETFs took in more over the past 2 days, Tuesday and Wednesday, than the gold ETF took in during its entire first year. So, yeah, just tough not to be excited about this going into the election.
MicroStrategy announced also some purchases.
Yeah, they announced. Oh God, what was it? I think Saylor announced plans to buy $42 billion worth of Bitcoin over the next 3 years. For context, $42 billion is about double the amount that all of the ETFs have brought in so far since launch. Let me fact check myself on that. Yeah, raising $42 billion to buy, more Bitcoin. So yeah, $42 billion over the next 3 years.
JP Morgan update on the Coinbase, very timely. Thank you, Kenneth Worthington, who was the analyst over there. They kept their price target the same.
Kenneth Worthington?
Yeah, Kenneth Worthington.
That is just a Chad analyst name, if I've ever heard
it. Their summary was Q3 2024 results fall short of expectations, but Coin continues to execute on its longer term plan. Potentially more friendly regulatory environment on the horizon. That'll be nice.
Skale is the blockchain that is simply built different. Let's face it, other L1 networks have costly transaction fees that increase as the network gets busier. Skale has solved this problem with a gas-free, scalable infrastructure where users never pay gas fees. Skale was awarded the most active gaming chain in 2023 by CoinGecko and hosts 5 of the top 25 games on DApp Radar. You should definitely check out Skale. I was using it the other day. It really is incredible to use. That's Skale, spelled with a K. Hit the link in the show notes or head on over to skale.space/ecosystem to get started today. Hey everyone, Jason here. I wanted to quickly talk about Cronos ZK EVM, a next generation zero knowledge layer 2 blockchain network focused on scalability, security, and innovation. Secured by Ethereum, it further expands the Cronos ecosystem using ZK Sync tech. Cronos ZK EVM has launched its Pioneer program, offering early users loyalty points for engaging with Cronos ZK EVM and its dApps. Join the first quest by depositing CRO in the Cronos ZK EVM bridge to receive ZK CRO and loyalty points at mainnet launch. And that's not all. In addition to receiving ZKCRO and loyalty points, you could also win part of a $30,000 ZKCRO giveaway by depositing in the bridge. The more you deposit, the better your chances of winning. Visit zkevm.cronos.org/bridge for more info. Now let's get back to today's show. Hey everyone, Jason here. Just wanted to remind you about the Aggregation Summit going down this November 10th to 11th in Bangkok, Thailand. This is a can't miss 2-day event with some of crypto's top builders, researchers, and leaders discussing the fragmented ecosystem of today and how aggregation can bring the industry together. Ag Summit was designed by Polygon Labs to be a space where ideas are discussed in collaborative, creative formats. From spicy fireside chats to even game shows, you get to experience a wide array of events at this year's inaugural Ag Summit. Head on over to aglayer.dev to book your tickets or join the main stage live stream on the 11th of November. Earlier in today's episode, I mentioned Ledger's latest products, the Stacks and Flex, and I wanted to take a few seconds to tell you more about them. These wallets feature the world's first secure touchscreens, which don't just simplify your digital transactions, but also keep them extremely safe. These wallets are virtually impenetrable to online attacks because they store your private key in a secure offline chip. You can manage more than 5,500 tokens and install up to 100 apps. Choose the most trusted name in hardware wallets and take control of your digital security today at ledger.com or hit the link in the description of today's episode to check out their latest wallets. Let's talk election, because I feel like we've done a pretty good job of not talking about the election so far on the Roundup. But there's a so here, first let's pull up Poly Market. Let's see where the odds are sitting. All right.
66 for Trump last check. Kamala 30 something, 33.
65 versus 35.
How far
all
off?
Right. So Fortune did a big piece. Who is Leo Schwartz at Fortune wrote this piece, exclusive election betting site. Polymarket gives Trump a 67% chance of winning, but is rife with fake wash trading, researchers say. The researchers in this case were Chaos Labs, who I know you're an investor in. They run by Omar. They do great work. And then Inca Digital. So Chaos, I'll read a snippet of this. Chaos Labs, separate analysis by both firms said that there was a false impression of volume and activity. Chaos Labs found that wash trading constituted around 1/3 of the trading volume on Polymarket's presidential market, while Inca Digital found that a significant portion of the volume on the market could be attributed to potential wash trading. What are your thoughts on this report, on this thing?
Well, caveat and preface that I'm both an investor in Chaos Labs, and I led one of the earliest rounds in Polymarket, and Parify is one of, if not the largest holder of Polymarket, and I have vested interest in both. So that is bias and disclosures out of the way. There's two arguments. One is people in crypto are more inclined and kind of are expressing their views not rationally, but just their desire, so to speak, for Trump to win. But the other counter argument to that is, well, but they're also rational investors. Like, they're not going to lose money, and there's an arbitrage potential opportunity if the market's off, right? So I'm not really sure how to explain it. Like, there is a big delta between these markets. You would think that there shouldn't, and this delta, as I understood it, like, it was very tightly correlated. Like, the spread between predicted Robinhood, some of the others, and Polymarket was not far off. But it has just recently really blown out of proportion.
First of all, I love that reporters are starting to work more with like the Chaos Labs and these data providers. I think that's a really cool thing. I really didn't like the framing of this article because the title says Polymarket gives Trump a 67% chance of winning. So it's about these odds, but is rife with fake wash trading. So what you're doing there is you're saying the wash trading is making the odds skewed. And there's a really, but that's not actually how wash trading works. Wash trading shouldn't impact prices very much, right?
Mm-hmm.
Wash trading can create false market perceptions. Like the volumes can be wrong, but that doesn't necessarily mean price manipulation. So I think I just, yeah, I don't like saying that what this is, the title implies that wash trading has created price manipulation, leading to Trump having this 67% chance of winning on Polymarket. It later in the article, down the article, the author acknowledges that, you know, that's not how wash trading works. It doesn't actually change the, usually it doesn't manipulate the price or the odds here. But again, like I don't think anyone's reading this article. It's behind a
Yeah.
paywall. You have to pay for like nobody read this article, so they
By the
just
way,
see the headline.
a lot of these are woke, publications. So yeah, New York Times, Fortune, they all skew, Democrat, I believe.
So again,
I am reading.
I like the premise of doing investigative journal. I mean, I will
Yeah.
always support someone doing investigative journalism, and it's a really hard business model, and we're in the same business, right? But like, I
Mhm.
just really don't like trying to discredit something like this on a false premise. Um, and what's actually
So,
happening is, here's what's actually happening. Polymarket's definitely, or probably, I know nothing. I'm sure you know something and can't say, but like Polymarket will probably launch a token, and just like anything that is going to launch a token, there's all these farmers who come in, and there's no fees on Polymarket. So what do you do when there's no fees in a future token coming? You
mhm.
you wash volume, right? Just like you would on any DEX or crypto exchange or whatever. You just wash a bunch of volume to rack up user activity to then get a token. So that's what's happening here. It's not, what they're quietly doing is implying that there's like fake volume coming in to move the odds. That is not what's happening. There's just airdrop farmers coming in and washing a bunch of
Yeah.
volume. So
So Omar, he's supposed to join. He'll join next week, but I'm reading his tweet thread. Right, there's a couple of observations that he makes that I think are just worthy to present without commentary. Um, so there, the Trump Yes tokens have traded 1 cent to 10 cents higher in Polymarket than similar tokens on Kalshi, a U.S. only prediction market that recently received regulatory approval. So it's really on August 17th that this spread really blew out. He posted this 6 days ago, by the way. If you want to show it on the screen, there it is. That one.
thanks.
Yeah, that one. So what the data shows, according to them, a single person on August 17th bet across 4 distinct accounts, Fred, in Polymarket, and began accumulating a massive Trump Yes stake. That day, this particular trader's activity over these 4 accounts accounted for 28% of the market's total volume in Polymarket. He purchased a roughly 700K of Trump Yes net shares. There was also a piece on the New York Times that talked about this. So this single 4 trader cluster accounted for 28% of the Polymarket's activity.
And
And
that's one trader's behind all four of those
one
accounts.
trader is, I think he's French. One trader accounted
Yeah.
for 28%. So um, it really was. 4 of these days were concentrated around mid-August, so when Polymarket's implied Trump odds began diverging significantly from the polling-based consensus. So of course this moves the market in Polymarket. We know that. Um, so Polymarket's current 1 cent market depth, that is the size of an order needed to move the market price by 1 cent, is currently around 100K. I think that's interesting. So it's a large market, but the market depth is particularly, in this case, he's making the argument it's not as kind of robust. Um, and it was quite shallow in August. Okay. Um, this particular trader since August has bought or sold more than 100K size with a single transaction on 60 different occasions. You mentioned that again and again. Omar, why are you repeating yourself? Making a fool here. So what's the gap? This is the TLDR. The impact of the whale trader, Omar argues, cannot be understated. If one entity represents 25% of the total market and at times 20% of the daily volume, it will have an outside influence. And further, the illiquidity of these markets, can move the price. However, this is probably the most important point. He says there's no trivial way to arbitrage this spread, which is the point I made earlier. Under Kalshi's current fee structure, price takers in the election market pay a fee of 2 cents per transaction. So that potentially is gets in the way of arbitraging this. And furthermore, Polymarket is only available in theory to non-US users, where Kalshi is only available in theory and practice to US users. So that might account for the kind of the ability, the I guess, get in the way of like arbitraging this out. And then last, Matt Levine also wrote about this. Any would-be arbitrager runs the added risk of an adverse market resolution if a candidate disputes the election result. And that is probably the most important. So, in summary, and I don't know how much of this explains it, because your point around wash trading doesn't explain the difference. The difference of the spread might be just a particular preference of a user, non-US versus US. And if the spreads are that wide between these markets, in theory, in an efficient market, that should be arbitraged out. But because of this, two things: one, US users versus non-US users, different people can't access the platform. The fees to come in and out of this are mitigators. And the third risk of, I think before in the prior election, Polymarket had an issue because obviously the election result was contested, and the resolution of that market was controversial. And so if you want to arbitrage these markets, you might not. It makes you think twice, is what I'm trying to say. So I don't think your point is a really good one. Wash trading doesn't explain the spread. The lack of being able to arbitrage that spread for these three reasons I just outlined that Omar and Matt Levine talk about would explain the spread. It's a material spread. So, anyways, that's really it. I don't have a point of view here.
Cool. By next roundup, there'll be a president. So we'll see. Gonna be a crazy week.
Have you voted? Have you voted?
No, I still haven't voted yet.
Why not?
Because I'm lazy.
God damn, go and vote. So you are what I consider pretty politically well versed. I know we don't like to talk about politics in the podcast. Give me your 2 to 3 or longer view on the election. Just summarize it all for people that are, been living under a rock. What are you paying attention to? What do you think the results going to be? Just give it all. I'm putting you on the hot seat.
I have no idea. I have no idea. I think it's crypto people pay really close attention to Polymarket. Like we just spent 15 minutes on a podcast talking about it. The 65% Trump versus 35% Kamala makes it feel like Trump is obviously going to win. I think it's going to be ridiculously close. And then what's going to happen is, like, I think it's literally a toss up. And then I think what ends up happening is, I mean, both sides are already prepping for a all out war to contest the election. Mm-hmm. So this thing's not like, I think there's an idea that the market is waiting for the election to calm down and to get some certainty, and then things rip. And I don't think that could happen. I don't think that'll happen until maybe January, maybe even into February, because November and December, there could be even more uncertainty then than there is today. I don't know if it'll be that drastic, but like I think it's going to be. We'll never see. We've never seen a contested election like we have seen than we will see for this one. So that's the first thing that I think I'm kind of prepping for mentally, that I don't think people are thinking too much about. And I know both sides are going to do that, right? If Kamala wins, Trump's team, their Republicans are doing an all-out war contesting the election, and same vice versa. So that's gonna get pretty messy, and I think that won't bring the market certainty that people are expecting. That's one thing. On the like next couple of days, I mean, it's basically just people have mostly made up their minds. I mean, there's very few undecided voters anymore. Now the important thing is getting people to the polls for both sides. So
including yourself.
Getting me to the polls. No, I'll vote. I always vote.
You don't strike me as a non-voter.
Yeah, I always vote. interesting thing about that is there's two extremely different campaign teams. So usually in politics, you have like basically a carbon copy of the operation and the team on both sides. Just one is red and one is blue. It's like blue team versus red team. Right now, Trump's team, if you look at the campaign team, is extremely different than Kamala's team.
Oh yeah.
Like in their operations and who they've hired, and
I mean, it's just
so
he's trolling. He's like in a garbage truck because like Biden called him garbage. Like it was
right.
just
So
so
Trump's
nice.
strategy right now is like, McDonald's, the garbage truck stuff, these huge rallies.
Gotta give him
And so I
that
think
credit.
there's actually probably more people who are interested. I mean, there's a lot. He's done a great job of getting people interested. He doesn't really have the ground game that Harris's campaign has. Like Harris in the key states, like they are on the ground. They know they have years of experience of how to get people to
Mhm.
the polls, I will say. So it'll be interesting to see if, like, yes, Trump has
Yeah.
gotten a lot of people very interested in Trump.
Yeah.
Can he
To be fair,
actually,
yeah.
like, you can have a 22-year-old
hmm
or an 80-year-old who loves Trump but doesn't get off their ass to go
Yeah,
vote.
yeah.
So it's really important
Well,
that both sides right now are getting their people to the polls, not
right,
just, hey, I'm a Trump guy, or hey, I'm
right.
a Kamala guy.
Well, if you listen to Elon Musk's speech at the Trump rally in New York, Madison Square Garden, which is super electric. I saw some clips. His point was go and vote, like get out and vote early, and let this be a landslide result. So I mean, I think like the weight and gravitas of Musk, I think, is very important. How, to your point, how much of that translates into people getting to vote? It is just to your point around friction and inertia. It is just a game to get people to vote. Trump is tweeting at Mert. I mean,
I
I
saw this.
never thought I'd see that. Mert, congrats. I think ratioed Trump too. Pretty amazing. Look, I mean, we talked about this before. The swing states historically have been tight, like less than 100,000, 150,000, like difference in these in the outcome. Best believe that there are at least 100,000 people in some of these states that love crypto. And imagine the headline. That would be probably the most bullish headline for this industry. Imagine the outcome of the result comes down to swing states, very tight margin, 100K voters, and these voters, most of them are pro crypto, and they just identified more with Trump because he's just been very clear and pro crypto. And if imagine the headline like Trump wins key constituent base, the crypto, both PAC from a fundraising standpoint, but also more importantly, younger voters. Like Obama won the younger crowd, won the immigrant crowd back in the day, right? And that was the headline. So younger people, he really did that grassroots campaign. I think that was probably the Democrats you're pointing to better job at that. But imagine if this election is won because of the crypto voter. That I think unequivocally just places crypto, sets an immense precedent of how important crypto is, that has captured the zeitgeist of a generation. It sets, I mean, that would be, yeah, that would be pretty amazing, if you ask me.
If you ask me. Too bad you can't vote.
Well, I will say I'm wearing, I am in the U.S., so I don't know if people can see, but I'm wearing a American flag, baby. Can you see it?
Yeah, I can see it.
I wanted to be in the U.S.,
Yeah.
so not just for the marathon, but I want to be here. I think it's gonna be a historic election. Yeah, I'm really excited about it.
Nice. There's a trash article in the Atlantic. Here, I'll show you.
Shocker.
The Atlantic posted the worst of crypto is yet to come, and made the argument that the only reason that crypto has come back over the last 2 years is not because anyone built their way out of a bear market with all odds stacked against us, but because we've spent a lot of money on super PACs. And it's just, like this. I mean, it's just,
More reasons.
I don't know why this stuff still bothers me. I'm like, what a stupid article.
Well, I canceled my subscription to the Atlantic a couple years ago. Needless to say.
There you go. All right. Last thing I want to talk about is the Celestia unlocks. So, There were big Celestia unlocks yesterday or Tuesday. There was about a billion. Oh man, I think I'm going to get this right. Yeah, it was 180 million TIA hit the market, which is roughly, nine at the time was like
8 to 900
900
million.
million.
Yeah,
So
Celestia was hovering above 5-ish or $5, so that's yeah.
no higher 6. It was at
Oh, six
6 a
bucks.
week
Yeah,
ago.
sorry.
Yeah,
Yeah.
6. So it's down about 25%. Um, Yeah, down. So, anyways, huge unlock. About $1 billion of TIA unlocked. Represents about 80% of the current supply. Got unlocked this week. Funding rates on TIA were crazy negative in the past like couple weeks.
Hmm.
And I mean, it's actually positive today. If you look at CoinGlass, I guess that's what
Yeah.
VCs closing out their perp shorts as
Yeah.
they unlock them.
Mhm.
But yeah, I'm just curious how you like when you look at this big of an unlock hitting the market. TIA is down from 6 down to
Or
470.
yeah, yeah.
Um, to me, I'm like, this is kind of what I've been talking about for a little while, which is I think some of these unlocks are overblown. Like that, yes, that's down, 20%, 25%, but like it feels a little it feels like the market absorbed it better than people thought it was going to absorb it. But I'm curious how you, although I guess maybe the counter argument is this is this is the real chart. It's
Yeah.
really down from
Look at
ooh,
Arbitrum. Yeah, I mean, look, yeah, it's down quite a bit.
down from 20 down to 470. So
I think they did some. One of the things that I was tracking was secondary market activity and transactions for TIA. There was a lot of movement there over the last 6 months. There was some, I think, there was some like treasury diversification transactions at higher than the current spot and even before the unlock, like $6. I think there was some movement there, which likely, to your point around it wasn't as bad as you would have thought. I think a lot of it is just secondary market, healthy secondary market allowed for some of this orderly transactions before the unlock. And I think these shares are not potentially VCs that are way in the money of de-risked, and so that creates a more orderly unlock. I'd say it's still down quite a bit. Arbitrum had this, we'll see. I think it's too early to tell. I wouldn't be shocked if this goes down to $3. I would also, because as people continue to sell, and there's this idea of like, all right, I'm not going to sell maybe in the first week, but I'm just going to continue to drip out, and there's just constant sell pressure. I don't know. You could also argue that the market's just been soft for a lot of these projects. It's really much a Bitcoin Solana meme game. ETH is flat. And also, you could talk about specific idiosyncratic things about Celestia, right? It's you could look at like DA revenue, it's not much. So is this, do these things trade on fundamentals or not? And I mean, certainly, I think that's something that I'm observing. Like what's the DA revenue? Like, yeah, I understand the modularity thesis. It's important. We've talked about it. We've had Nick White on the podcast. We've talked about it. The question is, yeah, block like go up to that. You look at your dashboard, which is really good here. Total block fees are 51,000. Like, there's a massive amount of data. It's important. There's not much revenue. So it makes you wonder what's the viability of this project. At some point, fundamentals, I believe, do matter. And you compare that against Maker, vastly different story. So that's just trading at a higher value, no?
let me take the counter argument. Counter argument is that all right. So if you look at the Blockworks Research Celestia dashboard, you can see Celestia data posted to the blobs by namespace. So you can see like things like Manta and Lyra and Eclipse and B3 and things like that. I mean,
Mm.
that chart is up and to the right. Here's the I think bull case for Celestia. The market still doesn't trade on fundamentals. No one's valuing this thing on a cash flow basis or a multiple of revenue. There's big volatility in the short term because there's these obviously unlocks. The bull case is probably blob space demand is on fire. It's on the rise. L2s are launching. Every day it feels like modular stack is expanding, and Celestia has basically positioned themselves as the go-to DA layer. Got to
Yeah, it's a
imagine
go-to
what.
D, it's a go-to DA layer, but there's no value capture.
Okay, but like if you're Celestia,
Like
what?
compare that to Jito's revenue, man. Like pull up Jito's fucking revenue record. Like, you know what I mean? Like, again, like maybe it's not the right comparison, but like I definitely, you know what I mean? Like Solana just continues to post, and capture a lot of this MEV and transaction fees and tips. Like, I don't know, like, I never want to invest in look, none of this is investment advice, but you ask me, I don't want to touch something that doesn't capture and does fundamental value. I'm sorry, but I don't feel comfortable owning it in size of my portfolio. Chris, if you're listening for placeholder, I know he's a uber bullish Celestia, and there's others that are not. So we can have a pod. I think it'd be a great discussion. I do want to fundamentally understand why this thing is worth how many billions?
We should do a pod with Nick and Chris.
All right, well, let's do just napkin math. Spare me a minute. I'm going to pull up FDVs for these projects, and I know people are going to say, why are you looking at FDV? Well, sorry, folks, this is how my brain thinks. So if you don't like it, close down the tab now and stop listening. Jito.
Here, I've got it right here.
Jito market cap 300 million, FDV 2.3 billion. Okay, 2.3 billion. Celestia. FDV 5 billion. All right, almost over a 2x discrepancy in fully diluted val. To be fair, Celestia has 30% of float. Jito has less. Jito has 13% float. Okay. All right. Fair point. But still, 2x different. But you know what I mean? 2x difference in fully diluted. Jito's making vastly more money than Celestia.
I get that.
Okay.
I get that.
Maker. Lastly.
No,
I'll stop talking. Maker. No, you got me. This is La Colombe coffee, by the way, ladies and gentlemen. Locked in. Maker. Maker, $1 billion in market cap. Vance from Framework, if you're listening, you should come on and talk about Maker. Fully diluted val, 1.1 billion, 97% float. All right. Maker is making how much money?
Here, financials, monthly, last month, 230 million.
Well, like Maker makes in a day what Celestia makes in a year, so to speak, kind of thing. Or more. Like, I don't know, ladies and gentlemen, but I don't want to own something in my book that is trading at 5 billion and is making less money than I don't know.
All right. Let me just take the counter, and then we'll wrap this up, and we'll have Nick and Chris to give us the uber bull case for Celestia, which is Celestia is the go-to DA layer right now. Token's been whacked because of these unlocks. The unlocks just happened. L2s are launching every single day. Blob space demand is on the rise. ETH blobs are just starting to see like early price discovery. The blobs are probably going to get more and more expensive as more L2s come online. And if I am Celestia, I'm thinking about, you've got your kind of modular stack. You got to eventually expand outside of just DA and give people the ability to launch, to kind of compete with the OP stacks and Anishas and, Avalanche L1s and ZK Elastic Chains and Arbitrum Orbits of the world. So that's probably where I would guess Celestia goes. So Celestia announces maybe that they are competing with the OP stack. I don't know. That's the counter.
Sounds a lot like I need to believe many things to happen and basically priced to fucking perfection. I don't know, man. I don't need to believe many things for Solana activity to continue to perform, and it being the most friendly chain and integrated, and you know what I mean. Like, sounds like a Jenga tower of assumptions. Celestia has to do this, and then maybe they'll do it.
Nick, Chris, you're getting the invite.
Like,
coming on the pod.
Please come on. Great tech. Again, there could be great tech, but the value accrual may not be there. There's plenty of examples of that. Now, maybe in the future, certainly possible. If it's great tech, it's embedded. They have the possibility to then, capture more value in different ways. A lot of companies like Uber had this issue, and I'm cognizant of that. And it takes years to turn a profit. It's a good product. Eventually, you have the optionality. If you're really embedded, if every L2 is using you, then presumably you're in a position of strength and you can lean into that to make more money. But currently it's not making money. For that reason, I would be cautious. That's all I'm saying.
All right. Last thing on this note, and then I have one more thing to share, is our friend Simon over at Moonrock Capital posted this note on Scroll. So I know you're an investor in Scroll, so I don't know how much you can talk about it, but Simon said, I really don't want to hate on Scroll, but to me, it was a textbook example of a launch using an outdated playbook that doesn't work anymore. VC raised at an inflated valuation. pointless airdrop farming meta. And the worst is Binance listing for 5.5% of the supply. That's about 70 million at least, flushed down the toilet. Sexes are the only winner again. Investors pissed, community pissed, retail wrecked. The one thing that they didn't focus on was the only real North Star metric an ecosystem should have: actual apps on top that people genuinely want to use, creating lasting value. It's unfortunate, but it was all too predictable that this approach would backfire. I don't need you to comment on Scroll because I know you're an investor there, but
I would challenge the last point though. The only real North Star. His point that they weren't focused on that, I would completely challenge. I think Simon, go and talk to the Scroll team. I think you'd be genuinely surprised of the quality of the builders there. I think they've done a very proactive effort and less playing the point meta game. I'll just say that. The Binance 5% fee we talked about. Yeah, I think my opinion on that is fairly clear, and it's just I don't think it's a Scroll problem. It's an industry problem, right? I mean, the fact that they had to give 5.5%
yeah,
of the supply is
Binance is just hosing people right now. But it's
bonkers. And by the way, like I don't have a sense of like this 5%, is it fair or not? But Sandy had a post about that, and she explained the reasoning. But I mean,
so it's not Scroll. It's not a Scroll thing. It's everyone is being forced to give between like 2 to 8% of their tokens. Yeah, of their token supply to Binance right now. It is highway robbery. So I don't know. That's why we talk about these ICOs coming back. Like that's behind my excitement about these ICOs coming back.
The last point I'll make, which every time we talk about regulation, is what's the intent of the law and who's getting hurt. And I think you could argue that in the current state of affairs, people are getting hurt far more than in a world of ICOs where.
Yeah. All right. To wrap it up, I want to just shout out the Blockchain Association just launched this dashboard. It's the regulation enforcement dashboard. It tracks the SEC's anti-crypto crusade. They update it in real time.
Wow.
Maybe not. I don't know how they would do this in real time. Self-reported data. The figure updates as legal proceedings continue. It shows the amount spent in defensive litigation, 426 million. The number of SEC enforcement actions brought against crypto under Gensler, 104. And it's just a good dashboard, and it shows this big report about like how they think about voter perception on SEC enforcement. So it's timely with the election and talking about regulation, and just shout out to the Blockchain Association doing good work. So.
All right, folks. Well, thanks for listening. Go out and vote. If you're in the U.S., you're able to vote and eligible. Please go and vote. It's important. Yeah, I know that includes you.
I don't miss voting. I always vote.
I know. Anyways, and again, if you're running the marathon, drop us a comment, drop your time, your corral, what have you, and maybe we'll love to see some of you folks out there running or on the sidelines. If you do see me, please cheer me on because I will be struggling.
Do you have your
struggling?
Do you have your bib number?
I do. My bib number. People can track me, I guess. No pressure. My bib number is 4851.
Let's go.
4851.
So there's an app that you can download, right?
Yeah, there's an app you can download. The results are online, so people can comment. And I don't have a time in mind. I'm just gonna go out there and have fun.
Nice. I'm gonna read a post that I wrote to wrap this up. Okay. I wrote this 4 years ago. Sent this email to the company, and I think it's relevant today. All right, I wrote, it's time to vote. September 2020. I said, whatever your politics, we can agree that the upcoming election is critical. I said, team, voting in the U.S. is hard. There are 50 states with 50 different systems. Nearly every other modern democracy holds elections on weekends or makes election day a national holiday, but not here in America. Let's look at what that does to voting. Just over 36% of eligible voters showed up to the 2014 midterms, the lowest turnout in 72 years. The 56% participation rate in 2016 puts us 26th among 32 developed nations in voter turnout. The importance of the upcoming election can't be overstated. We'd like to do everything in our power to encourage you to vote. Election day is Tuesday, November 3rd. If you plan on voting in person, take as much time as you need. Before November 3rd, there are a few actions you can take. Check your voter registration here. If you're not registered to vote, register here, et cetera, et cetera. whatever your politics, we can all agree this upcoming election is critical. So just a little
You
closing
can't
note.
complain. You can't
Yeah,
complain if you don't vote. And the bedrock of any democracy is civic participation. And so go out and vote.
agreed. Cool. Cheers, folks.
Ladies and gentlemen, thank you. We'll report back with a new president.
Hey everyone, thanks for watching today's episode. Just wanted to quickly thank today's title sponsor, Skale. Skale really is one of the best chain experiences out there today, and I've used so many different chains. There's a reason they are gaining so much adoption in both gaming and AI use cases. Hit the link in the show notes to explore the Skale ecosystem.